Hello, I'm Finola Burke from RaaS, and our focus today is on vehicle subscription business, Carly Holdings, ASX ticker CL8. Joining me to discuss the company's FY23 results is CEO Chris Noone. Welcome, Chris. Thanks for coming today.
Thanks for the opportunity to talk to you today, Finola.
So Carly's reported an 82% increase in subscription revenue in FY23 against FY22. And average subscription revenue also increased by 9.4% in FY23 and gross profit per subscription by 36%. Is this the momentum you were expecting from the business?
We're pleased with the results that we've just released, but we know that we could have done a lot better. Most of the growth came in the latter part of the year and in the second half. So in the first half, we were seeking asset finance facilities to increase the fleet size. We were successful in doing that in the latter part of the second half. So a lot of the improvement that you saw really came through later within the period. Now that we're entering FY24, we've got that strong momentum. We've got access to the asset finance facilities. We know that we have a track record now of delivering the gross profit increase, and we're taking that into the FY24 period. So we think it was a good result. But if we'd had access to more cars earlier within the period, we would have done a lot better.
And subscription vehicle utilisation rates are now averaging 86%. Are you expecting to see this increase over FY24? And how do you balance this with bringing on new vehicles?
As we know, when we bring on new vehicles, we do see a bit of a drop in utilisation. So it's up to us to make sure that we've got the marketing and the business development activities all wrapped up before those vehicles arrive. In some cities during the period, we actually saw utilisation of up to 100%. So across the board, 86% is a good target for us. But we feel that we can achieve beyond that if we have the right conditions and also if we have the right demand coming in that's matching the supply.
And apart from employee costs, you've driven down costs in the business despite growing over the course of the year. Do you feel you have the cost base at the optimum level?
We've always been quite conservative on the cost base of the business. If we are adding cost into the business, it's directed directly at the growth of the business. So we have a fairly good track record of driving down the marketing costs. We're pretty happy of where we are now in terms of our CPA. Our staff costs will increase to a small extent as we expand the team and expand our operations and increase the fleet size. So that's a natural consequence of growth. But we will always have a very strong focus on having minimal costs, but also not strangling the business and allowing it to grow as quickly as possible.
And you've only utilised about 1/3 of your $10 million facility. Do you expect to have this fully utilised by the end of FY24?
The $10 million iPartners facility is very well priced. So it's our intention to utilise 100% of that facility so that we can grow the fleet. We also know now that the supply issues that were prevalent in the automobile industry are now receding. We've got a good track record of being able to order cars and have them delivered quickly. And we see that situation continuing to improve throughout the rest of the year.
And looking into 24, do you see any shift in trading conditions? I mean, is there demand that's still there for subscription vehicles? And how are you leveraging interest in electric vehicles?
Absolutely. We see that there's still a lot of demand. Most people, most businesses, most government departments and not-for-profits are still not aware of car subscription. So we've got a very big market education opportunity. We also don't fear any terms of economic slowdown either, because there is a use case for car subscription when the economy is growing and also when it's contracting as well. So what's happening in the broader macroeconomic environment doesn't really concern us. The opportunity for us is to educate the market about the advantages of the flexible nature of car subscription. We're also recruiting our corporate sales team as well. We've never had a focus on this in the past. And we're also ramping up our referral relationships with SG Fleet as well. So from a demand point of view, we will be very much diversifying the channels that we use to acquire customers, and that will coincide with continuing fleet growth as well. In terms of electric vehicles, we see that subscription has a great role to play as the try before you buy opportunity. for electric vehicles. There's a lot of uncertainty about electric vehicles and how they will be perceived by business and individuals. So we allow those customers to try a vehicle for 1, 2 or 3 months. Once they determine the exact type of vehicle, the range that they're looking to do, how the charging works, they can then take a longer term decision about purchasing or leasing those vehicles. So we also want to make sure that we're not just providing the vehicle, we want to provide an end-to-end solution, which also includes bundled charging and other benefits as well, so that we're the one-stop shop for any individuals or businesses that want to try electric vehicles.
Well, thank you for joining me today, Chris. I'm looking forward to catching up with you through the course of the year to check on Carly's progress.